Wall Street is one of the most broken industries in the world, and yet I still love it. When others see fraud, ruthless capitalism, and stupidity, I see hard work, focus, Patagonia fleece vests, and of course, power. Maybe I should see a therapist. But before I do, this is Ken Griffin, one of the wealthiest men alive, with a net worth of $51 billion. His great-grandkids won't have to work a day. Ken Griffin founded Citadel in 1990. Citadel is widely considered one of the most sophisticated trading organizations in modern finance. It operates at the intersection of hedge fund investing, quantitative research, and market microstructure. Ken Griffin is an interesting man, but I'm here to study and break down Citadel. And to understand Citadel, we have to break it down into 5 core systems. 1. Its dual empire. Citadel operates 2 separate but complementary institutions. Citadel LLC, hedge fund, and market maker Citadel Securities. Let's break down the hedge fund first. It trades equities, fixed income, commodities, macro markets, and derivatives. Capital comes from institutional investors such as pension funds, sovereign wealth funds, endowments, and ultra-high net worth individuals. So don't even think of trying to get your money managed by Citadel. Citadel Securities provides liquidity to markets. It executes a high percentage of retail orders in US equities. Orders from brokers like Robinhood are routed to Citadel Securities through a system called Payment for Order Flow. It pioneered a structure known as the multi-manager platform. Instead of one central strategy, Citadel runs hundreds of small hedge funds internally. The portfolio manager, analysts, quant researchers, and execution traders. Each portfolio manager controls a trading pod. Each pod receives capital allocation, strict risk limits, and performance targets. If a pod loses too much money, the capital is immediately reduced or eliminated. This system creates a Darwinian competition inside the firm. So what about trading and investing strategy? Well, like most modern hedge funds, Citadel does not rely on one edge. It runs several strategy clusters simultaneously. Equity long and short, global macro, quantitative strategies, fixed income arbitrage, commodities trading, and machine learning. Citadel is one of the few firms that survived the 2008 global financial crisis. Today, it is one of the largest liquidity providers in the world. They make markets in equities, options, treasuries, and ETFs. This makes them part of the core plumbing of financial markets. Just like any successful fund, its internal culture is extremely intense. It's known for being extremely competitive, data-driven, high-pressure, and performance-based. Top portfolio managers can earn tens of hundreds of millions per year, but underperformance leads to rapid termination. So what can we learn from Citadel? First, trading is a system, not just entries. Data beats opinions, and one strategy rarely survives all market regimes. Diversification of strategies is key. As of 2025, Citadel has an AUM of $397 billion.